If you have questions, concerns, and are just lost when it comes to planning for retirement, meet Steve Hoyle and Derrick Caldwell of the Hoyle Financial Group. You know, at the end of the day, it comes down to what is the probability of success that you're going to have in retirement. Talk a little bit more about that.
Well, it's what your number is. We had a gentleman come to see us. In fact, we talked about him in our last educational workshop. But, you know, he had over $9 million, and he only had a 93% success rate of getting in retirement and through retirement successfully. And it's because he spent so much money each and every month. So, you know, and he had $9 million. Well, Derrick loves to talk about some of our clients couldn't spend $100,000 in a year if they had to, and some of them could spend $3 million. So everybody's different. But, you know, when we sit down and look at your estate planning, at your income plan, most of all taxes, look how much risk you're taking, all of those different things, then we can really come up with a plan and tell you what is your probability of success in retirement. Derrick, expand on that a little bit.
You know, a lot of people come to me and they're like, well, Derrick, how much do I need to retire? A large portion of people come to us and say that, and I'm telling them the same thing. There is no magic number. There are so many things that go into this analysis that we do for people, and it includes things like budgeting and income planning and how much you want to leave to kids, and all these factor into that number that everybody's looking for. But everybody's different, you know, and we sit down with everybody and really get to know them and dive into the numbers of their life. And it is something that takes time, and it works through because people need to know that. That's a huge thing is everybody says, well, I got $1.5 million. And Dave Ramsey told me on some podcast 10 years ago that I was okay because I have $1.5 million. Well, first of all, that was 10 years ago. But also, when people make blanket statements like that, they're just saying in general, guys, they don't know anything about you. When they may be factoring in like the average income and average expenses and everything, you may not be average. You may be below, you may be above. And there's a lot of things that you need to look at, and we will teach you how to do that. And when we sit down with you, I think that we'll find at least 10 things here, guys, that you haven't thought of, that you think you got a hold of. And when I start throwing these questions out, you're going to go, man, I haven't thought about that, Derrick. I haven't thought about that. And, you know, you could give your boss 2 more years, or you can give me 2 hours of your life. Let's sit down. Let's spend some time getting to know you and putting together this retirement analysis for you that really dives into these numbers, because it is not simple and it shouldn't be. This is your retirement. This is something you need to know where your income's coming from, what your legacy plan looks like, your wills, power of attorneys, all these things, guys, we help you corral. And get with us today, because that's what we do day in, day out.
We know President Trump, he continues to use the threat of tariffs on certain goods that are coming to the U.S. So what could we expect if and when the dust finally settles? Well, here's NBC News business reporter Christine Romans.
You'll feel it in a new car, anywhere from $3,000 to up to $12,000 extra for the price of a new car. But maybe first you're going to feel it in the grocery store. Think of all of those things that are imported from Mexico and China. Mexico in particular, all of that fresh produce, all these perishable items. From Canada, we get gasoline. From China, we get electronics and toys. Mark Zandi over at Moody's Analytics says you should expect another $1,200 to $1,300 a year for the typical household just for the higher prices for all of these things.
All right, so you take everything she said. Then, of course, let's add in this creeping inflation we've been seeing nonstop. We got a volatile stock market. I mean, really quickly, you could snowball yourself into an anxiety situation here, being stressed out. Is this just giving us more worry to think about, or how do we stay the course, guys?
Well, you know, Jess, it's real. I was talking to a friend of mine that sells Lexuses here in Dallas, and he told me that 2 of their models are built in Mexico, and as they're booking people, when you sign up to get a car in a few months, they tell you this is how much it possibly could be. This is how much it is today, and this is how much, and you've got to be good with it because they don't know. So I think it's really real, Derrick.
Yeah, Steve, that's where my mind went as soon as they started talking about Mexico and Canada on the tariffs, and I'm like, has anybody bought a car in the last couple of years? They're expensive enough as it is. I mean, there's so much resources that we get from those 2 countries that, you know, no one's really talking about. It's mostly focused on China. And I knew that one was coming, guys, but I was actually surprised by Canada and Mexico's tariffs. So we'll kind of see how that plays out. You know, they're kind of on and off again. So We'll see that, but you'll definitely see it hit your pocketbook. And, and Trump's been very clear about that too. Yeah, there's going to be some growing pains there with those. And he's trying to get a good deal and kind of change the deal structure within the tariffs back and forth between countries. So, we'll see how that goes. But I'll tell you, the biggest thing that I tell people right now that call in is diversification. Is what it comes down to, because you should have a portfolio to withstand these things. These are one of the stress tests we do on your portfolio, whether it's high inflation, expenses are high, all those factors in to a successful retirement. And you have to know that your portfolio is built to sustain that. That's just easy, guys. Those are things that we know in the next 20, 30 years, they will happen. It'll be up and down, up and down. And I mean, we saw the market right in the last couple of weeks. And I'm very blessed that, we do such a good job taking care of everybody that I did not get one call. One call from my clients because they know the plan. They know that they're diversified and they have certain buckets of money that are meant for certain things. And, the market dips 10% and my clients don't bat an eye. That's exactly what I want, right? And if you have seen this kind of inflation and things hitting your pocketbook, you've seen the stock market dip the last couple of weeks and you're stressed out about it, guys, you don't have the right portfolfolio.
Billionaire Elon Musk, he is turning heads in more ways than one. Not only is he hunting for government waste, we know he's the head of DOGE, right? The Department of Government Efficiency. He also told the Joe Rogan podcast that Social Security is unsustainable.
Social Security is the biggest Ponzi scheme of all time.
Right, explain that.
Well, people pay into Social Security and the money goes out of Social Security immediately, but the obligation for Social Security is your entire retirement career. Like if you look at the future obligations of Social Security, it far exceeds the tax revenue. Basically, people are living way longer than expected. So you have more people who are retired that live for a long time and get retirement payments. So the future obligation, so however bad the financial situation is right now for the federal government, it will be much worse in the future.
So I want to break down a couple of things that he says. The obligation of Social Security, we're living longer. Will the money be there? Is it sustainable? I think we could all, have some comments on that. He is comparing Social Security to a Ponzi scheme. It sounds a little extreme. Obviously, Ponzi schemes are illegal. Social Security, not so much. Again, it does highlight the solvency issue, and it's estimated that benefits could be cut at 25% in 2033 if Congress does nothing. So if Social Security becomes less reliable, guys, what strategies and what can we do to kind of fill in this gap to secure our retirement?
Well, we've been doing it for years. Today, if somebody comes to see us, they're 62 and want to turn their Social Security on, a lot of times we'll sit down and look at other income buckets that they have, using other monies to get them at least to full retirement age, 66 to 67, but all the way a lot of times up to age 70, because that rolls up at 8% each and every year. And with the inflation that we're having, you're going to need more income. So it's different strokes for different folks, but I really think that people should be prepared for a reduction. Derrick, on Social Security statements, it says if things continue like they are in 2033, your Social Security is going to be reduced. And, a lot of our strategies that we use, one of them has an opportunity. If Social Security falls, 3%? It has this huge amount of income that kicks in. So, people are planning for it. But I disagree about the Ponzi scheme, and here's why. For years, we told people, you pay these FICA in each and every month, and you're going to have this much money when you retire. So we've told people the money's going to be there. We, as a government, as a country, we need to step up and make sure that money is there.
Jess, I'd agree with you. I think Ponzi scheme is pretty strong because, I have a lot of clients, and Steve's been in business, 32 years or so now. So, we have clients that depend on Social Security as a piece of the pie and everything. And we've met and helped other people that's all they have, and just trying to get by and things like that. So Social Security is very important. So I don't take that lightly. But we also know and stress test our portfolios. If they lose half, if they lose it all, that is something that everybody should be thinking about, because the plain simple fact is that Social Security has to change. He is correct on that. Musk is not a dumb guy. You can say a lot of things about him, and some people like him, some people don't, but he's not dumb.
He's not dumb at all.
So there's going to have to be some changes, whether that the working people pay in more or people get their reductions at some point in Social Security. But you need something that's going to be that kind of proof where, hey, I know where my income's coming from. If Social Security gets reduced, then bam, we're pivoting this way. And there's a lot of tools out there, but one of the most, I think, the industries that have gone above and beyond and are way ahead of the game are going to be annuities on that and index universal life plans and everything, because they're already foreseeing the future there, and they're putting in those riders like you mentioned, Steve, and they're planning on, hey, if this reduction takes place, we got you. We're going to increase your income by this much. And there's even a lot of other annuities out there that'll increase by, a certain percentage based upon inflation and things like that. So the insurance industry is way ahead of the game on this.
Well, I think what I tell the listeners today, what we need to do is call us. Let's sit down and put an income plan together. Let's figure out what bucket of money you're going to use at what time, and make sure you have a really strong income strategy to get you in retirement, but get you through retirement, and at the end of the day, have legacy planning. Derrick, one thing that's so important for our listeners is not only for one of the spouses to have income for their life, but also for the other spouse. And that's the strategy that we can really help people with. It's where the rubber meets the road, I believe.
And I want to go back to a point that you just touched on here, Derrick, talking about annuities, because we know the demand for annuities has soared over the last few years, thanks to, of course, higher interest rates. The good news is for those who bought variable annuities before 2021, they are keeping up with inflation. But for those who bought a fixed annuity at a lower rate, they're not reaping the benefits here. So let's break this down. Is it possible to kind of do a little trade up when it comes to an annuity?
Absolutely. We kind of do an annuity challenge, to a lot of people that, hey, bring in your annuity statements. Let's take a look at it, because what was good 4 or 5 years ago, you're right, Jess. The market has changed so much. Annuities have changed so much. There's a lot of opportunity by moving those to newer annuities where you could get much higher upside potential out of your annuities. In fact, just talked to a client that's right before we got on the radio. He had a 4-year-old annuity that, it was doing about 4%. That's where it was. And he's like, Derrick, is there anything we can get more out of that? Because my bank's paying me 4% right now. And I'm like, absolutely. So kind of dug in, and we have the capability to search over like 30 different companies, find the best deal for you on an annuity. And he has locked in his 6% gain, guys, on fixed gain right now on that. So it was fantastic move for him. He got more upside potential there for it. And this is a guaranteed rate for him. So he was very happy. And he went from, hey, sometimes you get 2, sometimes you get 5, sometimes you got 4. And we're able to move him over there, and he loves it. This is a legacy for his kids that he's not going to touch, and he just wants to maximize every piece of his portfolio. And we were able to take him on as a new client because that's what he wanted. He just wanted somebody to help him with an annuity and say, hey, this is exactly what I want, but how do we take it to the next level? And that's why we do those annuity challenges, guys. Make sure that every piece of your portfolio is being maximized. Don't just sit there and expect it to do any better or less, or, challenge every piece of your portfolio. If it's not doing what you want it to do, it's not meeting your goals.
Now, we all know that the fuel to retirement, the name of the game is income, and then, yes, you got it, income. So the question is, well, wait a minute, where's the money tree? I didn't see it when I was driving down the road. Well, according to a new study by Schwab, this is where most retirees get their income. They say 40% comes from 401k, 20% Social Security, 15% savings and investments, 11% pension, 4% part-time work, only 3% of folks out there, annuities and insurance. We just spoke about annuities. And another 3% there at real estate. So that's 7 different places where people are getting their income. I want to know, are these kind of the common ones you see? Is there anything you would add or take away from this list, guys?
I would say, hobbies. That's something I've seen a lot come up too. Hobbies. People are getting more and more where they're kind of turning hobbies into like their own personal, I wouldn't say like part-time job. It's just something they're using lucratively to take more income off of. Like baseball cards are one that really, really got big during COVID. Coins, gold and silver. And it's just somebody's hobby that kind of turned into, hey, I can flip this or anything like that. Anything to make $1 these days.
Anything
right?
to make $1, exactly.
Well, yeah.
And Derek, I think also that 401ks are becoming less because when people, turn 59 and a half, they realize they can take control of their money and not have, as much fees as they have in their 401k, those hidden fees. And 59 and a half, you can take control of that money. We saw so many people do that before this last big downturn. So I think it's a huge opportunity. Then you can get that money out of harm's way. Then you have control of it. I think that's a huge thing.
Yeah, and I would say, hopefully it's kind of a combination of these things for everybody because that's really where they should be at. The danger and fear that I get when I see 40% of people are taking income for their 401k is, I think if that's the only place you're taking income out of, guys, come see me. That's scary because you're relying on the market to generate income, and most people are taking out more than they should, I'll tell you right now. And also, what's your backup plan? If the market dips 20 or 30%, where are you taking income from then? Are you still going to take it from your 401k? Yeah, and just keep digging a bigger hole? No way. Let's do something different there.
Well, I think also, Derek, with the downturn we've had in the market lately, a lot of people are coming to see us and saying, wait a minute, what a great time to do a Roth conversion and get the taxes out of the way. You're using discounted dollars, and what an opportunity to really take care of those taxes.
If you'd like to sit down with Steve and Derek or a member of the Hoyle Financial Group, visit retiretexasstyle.com.
Investment advice offered through Hoyle Wealth Management, a Texas-registered investment advisor able to provide investment advice in states where it's registered, exempt, or excluded from registration. Content contained herein should not be construed as an offer or solicitation for investment advice or for the purchase or sale of any security, insurance, or other investment product. Investments involve the risk of loss, including possible loss of principal. Please consult with a qualified financial, tax, accounting, or legal professional before implementing any ideas or strategies discussed here. Content provided is obtained from sources believed to be reliable but cannot be guaranteed as to its accuracy or completeness. By contacting us, you may be provided with information about insurance products, including annuities offered through Steve Hoyle, Texas Insurance License 716036. Annuity guarantees rely on the financial strength and claims-paying ability of the issuing insurance company. Read your contract for restrictions, limitations, or penalties. Steve Hoyle is not licensed in all 50 states. To find out if Steve Hoyle is licensed in your state, please call 806-371-9473.